Hello everyone, this is Hector. Today is Monday the 7th of May 2007 and I'm looking into a possible long setup in the 4 hours chart of for the GBP JPY chart. That's the sterling pound against the Japanese yen. Alright, well, let me first of all zoom out a little bit for a general outlook. We can see clear uptrend, okay, on this particular currency pair. Let's see what's happening in the right end of the chart. This is live price, by the way. Current market price is 239.47 right now. 46 now. It's London session as usual. It's the session I trade. Well, let's have a look whether we have the moving averages on our side. They're all pointing up. They're parallel to each other. There's some glitches in the charts, in the moving averages around here, but seems like price has gone back into trending mode. So yeah, all of them parallel to each other in order, pointing in the same direction. Price is staying clear of the 100, the area of dynamic support between the 30 and the 50s, holding the dives so far. So yeah, basically like we are in a fairly nicely trending scenario now. So I guess we could consider a long entry here. As usual, first of all, let's check whether we have any conflicting signals from the longer time frames. This is the 4-hour chart, so let's zoom out into the daily. Okay, we have a previous level of support resistance there, which has been broken already. No worries there. Next significant level, it's up there at 241.50. Since we are at 239.50 right now, we have 200 pips in between. We can definitely squeeze a profit. We have room enough to squeeze a nice profit from that. So you know, clear uptrend in the daily. So it seems like we are good to go. We have no conflicting data from coming from the daily. Last thing to check, as usual, is to confirm that we have no economic news announcements coming out today, either for the GBP or the JPY. I've already done that, and we have nothing significant coming out today on either those two currency pairs. So we are good to go. It's time to prepare our trade plans should we get an entry signal. Okay, first point of any trade plan. What's price doing? Well, price is currently a triangle. Okay, as you can see, we have a level which is 239.50, holding every single. One second, let me try to move. That's not actually that easy. There we are. Okay, that level. We have the 239.50, 60 level working as resistance above current market price. We also have an uptrend, so we are basically trading a triangle. Okay, as you can see, first of all, the 239.50, 60 has been working as resistance, and we have a downtrend on the below current market price, working as support. We are making higher lows, okay, building pressure, all right, onto this level. Okay, we are not making higher highs, but we are indeed scoring higher lows. That's in the direction of the main market sentiment, okay, of the direction of the main trend. So basically, price is effectively building pressure to the upside. Okay, the bulls keep charging in, This is the first last line of defense. If this line gives way, we will probably see a new swing up. Okay, we are building pressure with higher highs onto this 235.50, 239.50 level, right? Okay, where are my levels of support and resistance? I've already explained them. This is my level of resistance, and this the area of dynamic support is working once again as my level of support, bouncing all the retracements up nicely. Okay, you see there and there. Okay. As we've already explained, another point of any decent trade plan is to confirm that we have no news announcement coming out today for the for either any of these two currencies. We've already checked that out, and also we've checked out that there is no conflicting signals being presented on the longer time frame, so we're good to go. Now it's time to develop or elaborate or think out the script we want price to follow before considering an entry. Well, since we are basically trading a triangle breakout, okay, we will follow the standard script for any breakout, which is basically, okay, a breakout of the resistance level, then a pullback to a former resistance level, now hopefully working as support, and then on this point we will zoom into shorter time frames, searching for a signal formation. Okay, the entry signals that I explain on my website in the entry chapter. Breakout, pullback. Here we will look for a reversal formation. Okay, we will look for a reversal formation as I explained on the proper chapter. And as we see that price is bouncing up, that will trigger our long entry. Okay, that will trigger our long entry around that. Okay, now another point that every good trade plan should have covered. What does price have to do in order to keep me away from entering this market? Well, since we are trading a triangle breakout to the upside, okay, I want price to indeed break to the upside. If, in the other hand, we break to the downside, that will mean that bulls just don't have strength enough, at least at this time, to push above this price, the 239.50. And if we see a breakout to the downside, okay, breakout of the 50 moving average, which comes around there. Oops, let me draw that properly. The 50 moving average projects or should project something like that. Okay, if we break the trend line, we break the 50 moving average, and therefore making lower lows. Okay, you see this low right there. Right there, that was last week's, Friday's low, okay, last day's low. If we break the trend line, we break the 50 moving average, we make new lows, I will assume that this triangle breakout has fizzled, at least for the time being. Bulls just don't have the the muscle enough to keep pushing up, and any breakout down to this level will make me close this window right there. Okay, it will make me pinch it. 1 second, I messed it up. We are sorry. So yeah, any breakout below that, below the 50, below the trend line, it will signify that this this setup is non-valid, at least for the time being. Okay, if I do enter, if I find an entry, which should be, as explained before, around there, well, where will my stop loss be? Well, my stop loss be, of course, will be below